Today we're watching the 3-bar rule play out. This time, however, not as serious as what we saw in December 2024 and also what we saw in March of 2024. Each of those occasions led to a multi-month correction, and the correction we're currently in is still ongoing from the signal we got in December 2024. So today's video is looking at the short term, where we could expect to see strength and weakness line up for BTC, looking at the support and resistance, of course, and also what this means for the bull market moving forward. Hit the like button, subscribe to the channel, heaps to get through with you today, along with the US dollar showing some strength at the moment. The USDT dominance also showing some strength. So this is not good signs for the Bitcoin bull market, at least in the short term, plus our crypto data and our stock market data, which is also continuing to show a little strength here. Being a data-driven channel, I know many of you are missing out on our daily reports. The link in the video description is for our free crypto and economic report. Tomorrow, the Bitcoin report is going out, and then Thursday, our trading reports. This is all going to you for free, and you'll also get access to our free Discord as well, so you can check out the results and how others are trading using these strategies. Okay, so for BTC, as I mentioned in the intro, we're looking at the 3 days down. As I said, this is not as significant as those previous all-time highs, but it is something to pay attention to because of the previous time we saw this. If we chuck on our GansSwing Pro, this turns on the bar type at the top of the bar. We're looking for the 3 triangles, the red triangles in this case, and from these previous moves out of very significant lows. These were basically the previous turning points that we had in August of 2024, back when everyone was freaking out about the markets going down into another recession. This is talking about the stock markets, of course, and how it just couldn't possibly go on further because of the Japanese yen carry trade that happened at the time. We saw a massive bounce from there. Then we had the 3-bar signal. So we got 1, 2, 3. Now, of course, at the time, people were worried about this leading to a further collapse, and however it did lead to further lower prices, it was still a higher low in the market. It rallied from there, which then gave us an overbalance in time and price. So the significance of the overbalance in time and price from a very significant low is that it increases, or greatly increases, the probabilities that we're going to see a change in trend. And the trend at the time was very much down. That was basically 5 months down, top to bottom, 144 days, very close to your 5-month period. We got the move to the upside, 3 bars down. Yes, there's still a lot of pressure. There's still a lot of fear, as I get to with the crypto data in a second, that the markets could potentially collapse. It wasn't until we saw the next peak in late September that gave us the call, the overbalance in time and price, which then leads to a higher chance that the market is going to go higher. And that it did, but as every single case, every single time it happens, it's just that patience. And the patience, depending on where you want to measure it from that peak, from the day that we got the overbalance in time and price, or the peak from the overbalance in time and price, until there was a breakout into a new all-time high quite significantly. Of course, that was the day of the election, or just after the election. That was 40 days. So it's a long way of saying, do you have patience for 30, 40, roughly around 6 to 7 weeks? Can you wait that long if this is what it's going to take to get to those new fresh prices? In which case, we're now May, 6, 7 weeks is going to take us somewhere into June, July, if we extend it that bit further, because we're also looking at a bit of a rough period over Q2. That being said, let's get back to the 3 days down. We saw it again from the overbalance in time and price peak. So again, there it is, September. We had 3 bars, 1, 2, 3, lower highs, lower lows. Yes, the market ran down. It kept going from that point after a tiny rally, then a dump. But again, it put in higher lows coming back from the August period. So as always, it's not impossible that the market doesn't find a new fresh low, in which case this would probably mean that the cycle is over for BTC. However, long way off. Put that to the side for now, because we're still looking at this as being just a short-term move. And in terms of short-term, what we saw last time, from one to the next, 6 to 7 weeks, that's the top to the next low, and then also the top to the breakout point was about 40 days as well. So if you got that backed up and you know you can stomach any sort of movements from here into the next 6 to 7 weeks, then you're probably going to be okay. But if this weakness continues on and it's not just a pause and consolidation above the 50%, then we can expect lower prices somewhere down to at least 86 to see if it tests these highs, and then we can focus on the rest from there. That also comes in pretty close with your 50%, almost dead on the 50% level from this current top to the current very significant low on April 7th. So there is a 50% level at 86K. The first support level after this weakness or this sign of weakness, short-term, local top, which is something that we've been anticipating because of the move to the upside already, needs a bit of time to consolidate. Well, 92K is the first level, and we can take that back and look at all the previous support that the market was holding up from this level before it got the breakdown. So 92, 91 is going to be a very, very strong or important level for the market to hold. If not, it's not the end of the world. You've got 86K to the downside. The short-term outlook for BTC, the strength, the weakness areas to watch, as I said, the support levels and the price levels to watch because of this particular signal. It's also closed back underneath the previous tops of $95,500. That was the previous swing top here on the 2-day chart. And it was also significant tops on the 1-day chart as well. So the short-term trend is showing signs of weakness. However, the overbalance in time and price still remains. Longer move to the upside than anything we've seen since the top. That's going back to the January top. So more time and a longer range of a price movement. We have $23,500. Previous to that, the highest move to the upside was just $16,800. So it seems like the buyers are controlling this market at the moment for the medium to longer term. However, in the short term, they may have been exhausted based on these signals that we've just looked at here. And that's very, very natural for this particular stage of the cycle, especially if we're to see something similar to last time. Nice, significant, stronger, higher lows, which would just make for better entry opportunities or a higher chance entry opportunities for that next move to the upside. The market sentiment's doing what it did last time. We saw 5 months to the downside, a couple of months to consolidate before the next move into new, fresh all-time highs. The low or the higher low came in April thus far, and 6 months from that point takes us out to about mid-June. So that's why we're still looking at that time period, as I stated earlier in the video, around that 40 to 45 days, looking at sort of 6 to 7 weeks, and then assessing, are we getting higher lows continuing to form? In which case, that's a stronger signal. But if we start to see lower highs and lower lows put in on the chart while this is grinding out, that might mean we have to go back, reassess, and look at something like what happened in the bear market. I only bring that up because we have to be prepared for both sides. Everyone wants a confirmation. They want a guarantee because they think markets are about guarantees and their money has to be guaranteed to them. It's not the case. Therefore, we need to understand that there is the chance, although it might be small and lower based on what I'm at least seeing here, obviously on my channel looking for the analysis, the chances of this happening are much, much lower because we've seen now the overbalance in time and price. It's still important to keep an open mind for that, because the last thing you want to do is start to see things play out and not be able to change your opinion and then follow the market all the way back down because you were so stuck on the possibility or the guarantee, if you will, that the market had to go up. And that's essentially the mindset that happens to basically all altcoin holders or the newbies in the game. They hold their alts and they just hope that the thing's going to go up based on whatever the hell it is. And of course it doesn't. You start to see these things collapse without having a plan for both sides of the market. So now they've got that rant out of the way and we're looking at the sentiment around the market. Things are still on track. Short term, yes, there could be a fading out here of price. And that's also supported here with this data, daily exchange volume. The exchange volume just has not come back, but it doesn't mean that the game is over. We can see from August, September, October, even into the early part of November, the exchange volume was very dire. And I say dire because it barely ranged between the high 20s to barely $40 billion. We're currently at, well, 30 billion up to mid 40s. So similar sort of exchange volume, which means there's not that much activity and it's just dying out here. But the higher lows continue to form. So if we can get some basing around the high 20s, low 30s, it should be a good period for this next stage to form. Those higher lows coming in on the chart and this market sentiment also beginning to consolidate here as well before we get this next move to the upside. What is also supporting a cooling off period here for the markets is the search volume. Crypto, Bitcoin, Google Trends is dying off yet again. You can see from price action, which is king, we got the overbalances. And I keep referring back to that so that it's not looking like a fearful type of thing here, not a FUD video, but you can see why there would need to be a pullback or at least some consolidation in price, because the rest of the market just hasn't caught up to this yet. We don't see the exchange volume coming back. We see the crypto fear and greed, or the sentiment just consolidating. Neutral is fine. Fear is okay. Slight greed here and there is okay, but you don't want to see it spike into extreme greed then back down. And then in terms of the search volume, retail just isn't back yet. Another supporting evidence here is USDT. Don't worry, I'll get to some of the longer term, more hopium style things in just a moment. But the USDT dominance is also climbing slightly higher here. You can see the high was 5.21 on that swing top, and just yesterday put in 5.22. So basically an equal top here. Some might say double top, but you have higher lows. So it is trending to the upside after finding support at a very significant 50% level, so 4.97, call it 5% for a round number, and that's this range overall. In the past, that has not been a great sign because you essentially see support and then a bit of a move to the upside for the dominance, which of course means weakness for Bitcoin and cryptocurrencies. Generally, you're going to see a bigger hit to your altcoins if this is to continue on. The next signal here would be if this bar continued higher today and broke out of the 5.22 and got a close above that level. You'd be looking somewhere towards 5.35 and then up towards the 50% level at 5.6. And I've got a line here at 5.5. So 5.5%, 5.6%. The 5.5 comes out at these previous tops and also the double top before the market collapsed. This is USDT. This collapsed and everything else boomed. That's back in November 2024. We know that's where it broke out, ran to $100,000, $108,000. To make matters worse, for the short to medium term, this is for the total cryptocurrency market cap now, is that the weekly bar has been rejected at almost dead on the 50% level. $3 trillion is where it got to last week, and the halfway, the 50% from the top to the low here is at 3.02 trillion. So almost dead on there. Plus that was also support for the all-time high, and then the presidential top as well. This is total cryptocurrency market cap. So again, this might just lead to consolidation above $2.7 trillion. That comes all the way back down to these levels. Absolutely okay, which in which case would mean a higher low to the market, but it's just a matter of taking some time here before any breakouts. Now, what the bulls obviously want to see today or this week, breakout above the highs. More importantly, this week. Doesn't have to be today, but a breakout above 3.02 trillion with the weekly closing bar being above 3.02 trillion and ideally above these two tops here. Those tops are basically where the market collapsed, Trump tweets, and then collapses again. That tops at 3.16. So this would be a stronger market, closes above that level. A weaker market for the time being is anything between 2.7 and 3 trillion. And then a very weak market would be underneath that level and the market just consolidating here. And this is where things can get a little bit more bullish for the markets overall. And we're talking about the economy and the stock markets here. The interest rate announcements are coming out this week in just a couple of days. 4.5% was the previous. The forecast is 4.5%. Let's see what happens over the coming days. The market is still anticipating that they remain on pause because of what's happened in the bonds and the yields. It seems like things got a little bit broken there with the tariffs, and they need money to come back into the country to hold up the bonds, which then means you need to have a reason for people wanting to buy these bonds, because if the prices are going down and the interest rates were going down, then there's no real reason for them to want to hold on to these bonds. So the interest rates at the moment are still at 4.5%. Core CPI, that's the week after. But in terms of the markets and the price action, we've now clearly overbalanced in time and price to the upside. So larger moves here, larger time frames to the upside. However, what we've been tracking with the slowdown is the volume just dropping off. So things as well can push higher, and they can have corrections. That's just part of how markets move. But they've held above the 50% level now for a couple of weeks. So we have 2 closes at the moment, ideally 3, and a break above this swing top at 58 would be the icing on the cake. But of course, I don't control these markets. Ideally, that would be where you'd go for the stronger bull case, close above, and then some pullbacks to be above 50%. But otherwise, even back to 51, 5,200 points is still a good level for a higher low here. And that would just be more churning around like we've discussed with the cycle analysis using the predictive cycles looking back over 10 and 20 years. So that's for the S&P 500. Things are still seeming on track. The NASDAQ, similar sort of deal here, slightly weaker, but still above the 50%. Nice 2 weekly closes above that as well. And the Dow Jones also finally closing 1 week above that level. So we've just gone down the list with the S&P being the strongest indice, then the NASDAQ, then the Dow Jones, and the Russell 2000 being the weakest of them all. So these are your small caps, basically your shitcoin market of the US stock market underneath the 50% levels. But for the small caps, it's not too concerning. It's generally the laggard, and it's when we start to hear that people are making money from the Russell, they're all piling in towards the end. It's generally towards the end, like we saw back 2024 around these peaks, and again in 2021. They all sort of started to run in towards the tops, and that led to the final peak and then correction. So we had that yet again. Now, on top of that, we've got the sentiment throughout the stock market. And generally when this has been very high, so very bearish, you've got the red here, it's typically around a low or it's forming a base on the market. They were very bearish back in April here. And again, this whole month has been very, very bearish. And if the bearishness had dropped off, the bullishness also dropped off and more people went neutral. So it's basically indecision, and that has come from, well, clearly the dump of around 20% for the S&P 500. But as we've just shown, it's now sitting above pretty solid levels for now, even if there is a slight pullback. And to pull out one of the best signals that we've been using for years on the channel, here is our bar type on the Gann Swing Pro. Note the red, the red, the red. So we have 3 months, not just the days, not just the weeks, but it's on the monthly chart here of 3 months down. Red bars as well, 3 red bars and 3 lower highs, lower lows. This came in from the all-time high. From that area, with the breakdown in November, so that was break below the 109, 110 level, Bitcoin formed its low, and then has been on a bull market ever since that point. With the US dollar continuing to show weakness in the long term, and when we're talking long term here, this is multi-months to years, it's likely, not impossible, but it's likely that we'll see higher prices for BTC as well. Again, the game's just about patience. And so what I've done with the video today is just look at the short term for BTC. And there was a bit of a possible pullback or a pause here to digest the pretty constructive move to the upside. Those that have stuck around for the rest of the video will know that the macro is more important, and we're following the bigger picture here, the longer term picture. And with this, well, we've got the 3 bars down again from a relatively significant top, not as significant as the cycle top back in 2022, but again, a very significant top. And over the course of history, you know, these last 10, 11 years, when the US dollar has broken to new, fresh 3-ish year lows, 38 months, 33 months, 37 months, there has been a period of consolidation. In these 2 cases, it ran back up, but this time we're back underneath these tops. And that's a much, much weaker area to be in. So the flip side to this, we have to look at it. You guys that are here this long get it. You have to look at it. If we're holding above roughly around 100, 101 at the end of this consolidation, that might mean that the US dollar is going to see more strength in the multi-month term, back up to 103, 104. More rejections there would lead to further downside over this second half of the real estate cycle. And that's where I'll leave today's video. Like, subscribe, macro still intact, short term, just be prepared to have some patience here. I'll see you guys back at the next video. And if you haven't, subscribe to the free reports coming out today, Wednesday and Thursday for Bitcoin, the altcoins, and the economic update. Thanks again for your support, guys. I'll see you back in the next video. Until then, take care. Peace out.